Hey guys, here we have three multiple choice questions related to stockholders' equity. Let's try and quickly go through them. So the first one is, what is the cumulative effect of the declaration and payment of a cash dividend on a company's balance sheet, right? So we've been given four options, and decrease current liabilities and stockholders' equity, dot, 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 dot. So what happens when you declare and pay your cash dividend? Obviously, if it's a cash dividend, oops, I don't want it to be that bulky. So cash goes down, right? So if dividend goes up, this means retained earning goes down. Why? Because retained earning is net income minus dividends, right? So cash goes down and retained earnings goes up. So retained earnings is a stockholders' equity account. Cash is an asset account, right? So this means that there will be a decrease in asset and a decrease in stockholders' equity. So which one is it? So it should be decreased stockholders' equity and total assets. It should be this one, right? Let's see if that's the one. It is. So this is the correct option, right? Just because retained earnings goes down and at the same time cash goes down because it is a cash dividend, right? So what else? Oops, hold on, let me fix this. Okay, so for the second one, Swifty has 25,900 shares of 7%. So what does the 7% say? It shows, it gives an idea of how much dividend they're supposed to pay the shareholders, right? So 7%, 100 par value means 7% of $100 has to be paid for each share when dividends are to be paid. Non-cumulative. So this means if a company decides not to pay dividend for a particular year, it does not get carried over to the next year. Whereas for cumulative, it does get carried over, right? Non-cumulative preferred stock and 48,300 shares of $1 par value common stock outstanding at December 31, 2021. There were no dividends declared in 2020, so none carried over for 2021. The board of directors declares and pays 241,000 dividend in 2021. What is the amount of dividend received by common stockholders? So first, let's calculate the dollar amount of the dividends received by the non-cumulative preferred stockholders. So it would be 0.7, oh no, 0.07, right? So just write 7% times $100 times how many shares do we have? It's 25,900, right? So this zero takes this zero out. So in fact, it is 7 times 25,900. So now what is that number? Hold on, let me just pull up my calculator and see what that number is. So it is 18314. So this is a dollar amount paid to the non-cumulative preferred stockholders, right? Shareholders. So now, if we do the total dollar amount of dividends to be paid minus that for non-cumulative preferred stock, you will be getting for common stock, right? So this 241000, right? So we get 59686, which is awfully close, to 59686 to this one, and that is, that's the closest one. So that's the best answer for us here, right? Or there could have been a possibility that I made an error somewhere. Let me see. So 0.07 times 25900 times 100. Okay, so this gives you, yeah, there was a calculation error off by just a little bit. So this is this. It does in fact give you 59700, right? So this is the correct answer. Yep, it was the correct one. 2 down, 1 to go. Oops, I wanted to delete that. Okay. Final one. Which of the following show the proper effect of a stock split and a stock dividend? So for a stock dividend, in a way, you're issuing new shares. Stock split, it's mostly for cosmetic purposes. You're just dividing, like if it's a 1-to-2 split, you're changing 1 to 2 shares, right? So what happens? Total paid in capital increase. Par value per share decrease, no change. Total par value decrease, increase. Total retained earnings decrease and decrease is the options that we have here right now. Do we wanna go through each and every option, or do we just want to find the right answer? We can cancel out the wrong ones and find out which one's the right one, right? So when there is a stock dividend paid out, the retained earnings goes down, right? So the retained earnings goes down. This is correct, but then there's no change in retained earnings when there's a stock split. So this option is wrong. It does not decrease, it stays the same. For total par value, in a stock split, the total par value decreases. That's correct. In a stock dividend, there's no change in total par value. So that's wrong. Uh, Par value per share. In a stock split, it does decrease, right? That's correct. And for stock dividend, there is no change. So this one is the correct one. We found the correct one. We don't even need to look into the other option, right? So when there is a stock split, the par value decreases. That's the correct option, right? So let's say you do, you know, if there was, let's say, 5,000 shares earlier, you change it to 10,000, right? Just double it. If your par value originally was $1, then it's going to be divided by 2, right? Because you have twice the more number of shares, so it's going to be 0.5 bucks, right? So your par value per share goes down, whereas in stock dividend, you're issuing new shares, same par value, so it's this one's the correct option, right? Yep, it is. So there you go. These are the three right answers. And yeah, we'll be doing these multiple choice questions later in the future as well. So do watch those. And yeah, thank you for joining me on this one. Hope to see you in my next videos. Thank you.